Alrighty, what's up guys? This is Taylor, and this is your free video for Tuesday the 18th of October. So over in the options room at Simpler, we're trying to get filled on a December 16th 4,000 40-50 call credit spread on the SPX. So we're trying to short the S&Ps for December expiration. Now, as you guys can see at the moment, the spread's going for about $13 a credit. What we're trying to do is get filled on the first chunk of the short at about $15 a credit. So for now, the thought process is scaling in to a December expiration short. So to get filled at 15 bucks, we will need a little bit more upside. But all in all here, guys, I continue to think the path of least resistance is to the downside. So pretty good pop here today. You got the S&Ps up 1%, and we actually closed above that daily 21 EMA for the first time since, for the first time since early September. So you got your S&Ps up 1%, you got the QQQ closing, under the 21 EMA. Q's up 1%, and the IWM up about 1% and change. So not a bad pop here today. However, I don't think enough has changed just yet. I don't have enough evidence to want to get long the market for a swing trade. So I continue to think the game plan is short the rallies. And I think you want to short the rallies in a fashion where you have time till expiration. Don't put yourself in a position where you get short and the market has to roll over immediately. So give yourself plenty of time and then give yourself cushion. That is exactly what we're looking for here on that December expiration call credit spread. We're trying to give the short all the way until December. Plenty of time till expiration. And as far as cushion goes, we're trying to sell those short calls all the way up here at 4,000 bucks. You got your time and you got your cushion. But as far as the structure here, guys, not too much changes. So as far as the list of problems, take a quick look here at the dollar, and the dirty Dixie, I gotta think continues to look pretty bullish here. We got a fresh daily squeeze printing, and we continue to trade right around that daily 21 EMA. So of course from here, if the dollar can actually pull back a little bit, that's great for your S&Ps and your QQQ. However, if from here the dollar turns a corner and rallies back towards the previous highs, the expectation should be the S&P and the QQQ crap the bed and roll right back over. So for now, the structure, I think, continues to remain pretty bullish. I can't say that we're out of the woods just yet as far as the dollar goes. Moving on to the volatility index, and the volatility index, I think, still looks pretty bullish here. You got a daily squeeze on the VIX. We're above that daily 21 EMA, and we're still pumping out that daily buy signal. All pretty bullish. So no major changes there just yet. And HYG, the junk bonds, before I want to get long the S&Ps and the QQQ for a swing trade, what I would like to see out of HYG is a move and a close back above your previous support level around 73 bucks. So that's kind of the recipe. If I can get HYG to cancel out that daily sell signal and close back above previous support, if I can get the dollar to trade back under the daily 21 EMA, and if I can get the volatility index to cancel out that daily buy signal and trade under the daily 21, well, yeah, at that point, I think in the short term, as far as the pieces of the puzzle, enough things are coming together to justify getting long in the short term. For now, guys, none of those things come together, so I gotta continue to think we want to short the rallies here. And then, of course, as far as the market goes, we're up 1% here today. Doesn't do too much to change the structure. So, for starters, as far as the big three signals go, we don't have any buy signals. So I think right now the whole question is, we got a pretty good pop here. Does this turn into August, where we actually get a sustainable rally, or does it turn into a bit more of what you saw back here in September? pretty good pop that quickly rolls over and dies. My expectation is if we're going to get a rally like we had back here in September, or August rather, we should start getting some buy signals. So on that push you had back here, you had your buy signals on the 5-minute, the 15, the 30-minute, the 1 hour, all the way up to the 2 hour. Right now we don't have any buy signals. So I can't think we're going to rally too much more just yet. And then taking a look here at the QQQ, the QQQ actually closes under the 21 EMA today, and we're still printing that daily sell signal. So in other words, nothing changes here today for the QQQ. And of course, as far as a bigger picture goes, we still got some problems here, guys, on the bigger time frames. On the monthly chart here, the S&Ps, you've got the monthly squeeze with the first negative histogram since 2008. We're under the 21 EMA, and we're kind of at the point here where if you take out that monthly 50, we're pretty much going to see that monthly squeeze begin to fire short. And the monthly squeeze firing short from this point basically puts a knife in your monthly trend. I would think you see the market trade much, much lower. So all in all here, guys, not a bad showing today from the bulls, but as far as the structure of the S&Ps, as far as the big three buy signals or the lack of buy signals, and then as far as the structure of the VIX, the dollar, and HYG, I personally don't have enough evidence just yet to want to get long the market. I do, however, have enough evidence to want to continue to get to short the market on the pops. So, if we can get a little bit more upside this week, that's a trade we're looking for. December 16th, 4,000, 40-50 call credit spread, and we want to get filled on the first chunk at $15 a credit. And the game plan from there would be to try to scale into that short all the way up to that daily 50 around 39.20. Taking it day by day, being patient, but as far as the structure goes, not too many changes here today, guys. And as long as there's not too many changes, my game plan remains the same. Wait for a rally, short the rally, but try to short it in a fashion where you have time till expiration and you got plenty of cushion. I think the December expiration, 4,000, 40-50 call credit spread is a great combination of time and cushion. So we will see what's up here tomorrow, but for now, guys, those are the things I'm anchoring to. The dollar, HYG, the volatility index, and as always, the big three signals. Until those things change, I'm looking to short the rallies, and if we can get a little bit more upside, we should get filled on the first chunk of that 4,000, 40-50 call credit spread for December expiration. So I'll be sure to keep you guys updated over the next few weeks, but for now, that is the trade idea that we're trying to work, and I hope you guys find this helpful. If you haven't already, go on ahead and hit the subscribe button, and we'll talk to you in the next video. Have a great night, guys.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.